Hello everyone, thank you so much for coming to this video, and in this video I'm going to be showing you my crypto trading strategy. Now this is the strategy that I use to trade cryptocurrency every single day. So I'm going to be jumping into the chart. Make sure you watch it carefully so that you can also replicate it in your own strategy, in your own method. Now this strategy involves two things that I'm going to talk about. I'm going to talk about my risk management strategy, and I'm going to talk about my technical analysis strategy so that you can actually utilize it. So without wasting time, I'm really going to jump onto my computer so that you watch everything that I'm going to be explaining straight away. So simply let's begin. Let's get to the computer. Now, once we call what we call risk management strategy, or what I mean by risk management strategy, basically, I really mean that you need to, when you have, it depends on the account that I really have, or the type of account that I really have. If I have an account that is having, for example, let's say I have an account that is having $10,000, then that account I'm going to be risking 1%. And if I have an account of $1,000, I'm risking 1 to 2%. And I like also trading small accounts. So if I have small account, let's say $100 below, I'm risking up to 5 to 10%. So it means that you should know that if I have if I have a $100 account, I'm risking about $5 or $10 on every trade. Then if I have 1,000 account, a $1,000 account, I'm always risking 1% to 2%. That's how I trade. So that is my risk management. So when it comes to analysis, technical analysis, how do I do it? Now this is the first time I'm showing you this, so just follow it up and try to understand how my technical analysis is. So basically my technical analysis, there are so many. When someone talks about his strategy, you should first of all understand how does that person look into the market. How do you analyze the market? Like for you, what the first question is, how do you conceive the concept of market movements? How do markets move? That is the first question. When you talk about strategy, is what you conceive as how the markets move. So the first thing is that there are so many strategies out there, but for me, what is theory that I've picked, and it's my theory that I've used and it works for me, it is the Elliott wave theory. So I borrowed this from the Elliott wave theory, and the Elliott wave theory states that when price is moving, it moves through waves. So we have that first wave, the second wave. When it is in an uptrend, the second wave is always shorter than the first wave, and then the first wave is going to, the third wave is going to be longer than even the first wave. So this is how markets move. Let me get a proper tool that I'm going to be using for that that movement of the market. Let me get a proper tool that I'm going to be using for that movement. So let me get it once here. Let me get this tool, this shape, and then it's here. Let me use this. So the Elliott wave theory says that that's the first wave. The market moves in wave. That moves wave 1, wave 2, wave 3, wave 4, and then wave 5. This is how the Elliott wave theory states. So this is the way also I believe when I'm talking about market structures, that in a trending market or in an upward trend, this is how the market looks like. The market will make the first move, the second move that will be coming down will make at least a higher low. This low is going to be higher than the previous low, and it is going to be forming higher highs as you are seeing. So I picked this from the Elliott wave theory, and I said now the market is moving always in 5 waves. The market moves in 5 waves. Now you should always understand that. So for me, I had to pick the Elliott wave theory and I mixed it with support and resistance. So basically I use Elliott wave theory in conjunction with support and resistance. So everywhere that the market is stopping, but I'm not using support and resistance just like everyone else does. For me, everywhere where the market is stopping, so for example, if this is my first wave, I'll take this point to be so important. I'll take this point to be so important. So this has been my resistance, so I'll mark that point. So that's my first point. And then obviously where the market stops over here, it is also my key point. I also mark it up. Where the market is stopping over here, I'll also be able to mark it up. So I have, when the market has gone up, this is the first point that the market reached. So when it bounced, every time when the market bounced from here, that becomes my resistance. I told you that this method, I use it to actually capture both. I use it to capture both what I use it to capture both uptrends and downtrends. So let's talk about this, because we are in an uptrend. So my main aim whenever I get to the market or I'm getting to analyze, my first question is, where is the trend of the market? So I identify the trends of the market by seeing if the market is forming higher highs or lower lows. So the reverse of this up movement is the down movement. So for this video, I'm going to be actually basing mainly on upward movement, but in subsequent videos we will be talking about also lower movement, so that you can imply the same strategy. So basically, when I have this is my resistance here, and now it has created my new support. My support was down here, but right now this is my new support. So I see a breakout over here. When I see a breakout over here, I know that it is going to pull back. Now I wait for the pullback to enter to capture that fifth wave. So that pullback, there are now two things that I use basically to capture this pullback. Now my main aim, every time this strategy, I aim to enter at this point. These are my entry points. This is my entry point. This is my entry point. When I'm targeting, when we're in an upward movement, these are always my entry points. So what do I look at, or what makes me to enter these strategies, this trend? Now when I identify that the market is moving in an upward trend, I identify the market has formed the first wave. Please, I'm going to explain and show you real examples. If I identify the market has formed the first wave, what am I going to do? This is what I'm going to do. One, because already I've made the first wave, I'm going to pull out one tool that is called the Fibonacci tool. Now this Fibonacci tool helps me to always target this second retracement. Where is this retracement likely to end, so that I can capture that longest move or that second move. So that retracement, I actually use the Fibonacci tool. I put in the Fibonacci retracement tool. From where the market started, I pull it up to where the market stopped, and I try to look for the Fibonacci tool. Now when I look the Fibonacci tool, these are the zones that I always mark out. Let me show you the zones that I always mark out. I mark out the zones that are what? I mark out the zones around 0.5 and 618. Those are the zones that I like entering the market in, and let me mark them out. So I mark this zone 0.5 and 618. So these are the zones that for me I really look out to when I'm capturing that. Obviously has been working out for me. That market always I wait for the discount coin. The market comes in my 0.5 area or 618 area, and I enter the market around here. Nevertheless, I also take note of markets. In most cases, sometimes the market turns around 0.382 around this region here. But now I take these three regions, the whole of these regions, as all of these regions. I now take consideration of those regions, and I see price action at those regions. So this one, remember, it is a bear movement here. The market is pulling back. So when I identify this region and I start seeing like bullish narrative coming in, like bullish engulfing candle, and I start seeing a W pattern happening here, I start seeing an inverse head and shoulder happening around here, all those bullish narratives, if they start coming around this region, those are confirmations that I'll be taking a bullish trend, and I'll be taking my trend upwards to capture this trend. That is the first thing. So that's how I capture this trend. Now when it comes to the second trend here, I already have my support around this region. So I have my support around this region. So I really, in most cases, this can pull back, and sometimes doesn't reach my support, sometimes it stops over the way there. But what I do, I also apply my Fibonacci tool again from this region to the upper region to identify where my stops is going to. And obviously in most cases it is all around this region here in 0.382, 0.5 and 0.61. Those are my three Fibonacci zones that have been very helpful to me. And around this region now, I look for confirmation. I just look at price action. So basically today I'm not going to talk about the real confirmations, but these are the three confirmations that I look at. Now there are two candlestick patterns that I do trade. I trade the M and W pattern, and I trade head and shoulder inverse, head and shoulder, the inverse head and shoulder, and also the head and shoulder itself. But I trade what we call the candlestick or price action. Now here I all look for bullish candlesticks. I look for bullish engulfing candlestick. Mainly I look for doji candlesticks showing me the stoppage of this resistance. Basically once I start getting a bullish narrative around this region, I just take the trade with my 1 to 2 risk to reward ratio. So basically, this video I've just been introducing how my strategy works, and I'm going to be explaining more of this strategy, but I cannot complete the video before telling you which time frame do I use. Now basically, the higher the time frame, the better. I mark my regions where I mark my key zones, like the ones you are seeing on this chart. I mark them basically. Where do I mark them? I mark them on 1 week time frame. I mark them on weekly time frame, then I drop down to daily time frame, but I watched my chart on 1 hour time frame. That is the time frame that I take my entries on. So when I talk about the bullish engulfing candle, I see a bullish engulfing candle on 1 hour time frame. So let's jump into the chart and let's see some implication of this very strategy. Now when you get to this very chart, you are seeing that I'm taking a short trade and I'm waiting for a long trade here. Why am I taking a short trade and a long trade over there? Now this is a 1 hour time frame, and this is algo. This is algo on 1 hour time frame. Now when I take algo on 1 hour time frame, I already see this impulsive move. Algo, let's check on weekly time frame, you're going to see something that algo has been dead. It has been dead, right? Algo has been dead. You can see here algo has been really dead. So it has been from here, and algo has made that first impulsive move. So if on a weekly time frame, so if it has made the first impulsive move, I can come to a daily time frame. I can come to the daily time frame and it will look more clear. This is the daily time frame, and you can see that algo has already made now its first impulsive move. Now after algo making an impulsive move, I want to pick the Fibonacci tool. I'm going to pick the Fibonacci tool on 1 hour time frame. I'm going to turn to 1 hour time frame and now see, okay, it has made the impulsive move. Where is that move likely to stop? So I'm going to take the Fibonacci, try to draw it right from here up to above there to see where it is going to occur. So I take my Fibonacci tool. This is my Fibonacci tool, and then I'm going to draw it from. You draw the Fibonacci, you get the list, the where the trend has started. Remember, all this is a consolidation. This and here, all here we have a consolidation over here. It broke from upper. This is the move that caused a breakout. This is the move that caused the breakout. Some people get problems with Fibonacci tool. You come and start putting it on a consolidation. People use it differently, but if this has been still a consolidation, then for me, I really don't consider them. I consider the move that led to that impulsive move, and that's where I place my tool. So I'm going to place it over here and drag up to the top over there. When I drag up to the top over there, you can see that this is my region. You can see that this is my region. I have the whole of this region up to here. So I said whenever price reaches 0.5 and then below, this is how you should actually be looking at the Fibonacci tool. There is this 0.5, the 0.5 level. Below 0.5 level, we say that price is at discount or price is cheaper below 0.5 level. So if I'm looking to buy, I really want to buy below 0.5 level. So price is coming towards my area. Now I know that this being the first impulsive move according to Elliott wave theory, this retracement is the second impulsive move. I know this retracement is not going to be forever. That's why I'm projecting it to be around this region. That is the 0.618, and I have traded it. This trade is going on because that is the second move, and I know it's not going to be forever. That's why the longest move that I'm anticipating is this second one, that I hope it is going to break through all these regions and get to this resistance over here. So basically, my strategy is support and resistance alongside the Elliott wave theory. How do I look at the market? I look at the market in the form of the Elliott wave theory. And how do I get my key zones? I use support and resistance. And how do I actually identify the stoppage? How do I identify the stoppage of the trends? I use the Fibonacci tool and also use the trend line. I did not talk about the trend line. I'll talk about the trend line in the next episode or in the next time, but the trend line is also one way that I identify, especially when I'm capturing this fourth move or this last move here. I always use trend line. I try to draw the trend line here to capture the first move, capture the second move, and it helps me anticipate the last move here. That's how I actually use trend line. So thank you so much for watching this video. If you have liked the content and you want to get more of such content, make sure you subscribe to this channel, turn on the notification button, and I'll be here to give you more of technical analysis. I've been Jibril. See you in the next video.